Good day, I hope you all are having a fantastic day today. MG on Forex Trading, and today we are going to be tapping into Japan 225 or Nikkei 225. This is more of an unorthodox index pair or index that I'll be looking at. I'm not very familiar with the movement. However, what I do know is that it definitely loves the trend, and it's definitely a market that can be traded. So we're going to be tapping into this pair, and we're going to see how we could have tackled it from a high time frame perspective all the way down, conducting a top-down analysis. And I'm sure it's going to be fun. I'm sure we are going to learn something from it. And let's get right into it. This came from high demand from one of our traders, and I promise that I will definitely make a breakdown. So here I am, and let's get right into it. So first and foremost, I'm on the 4-hour time frame. I am on the 4-hour time frame, and what I see from this is we're in the bullish market. Impulse, correction, impulse, correction, impulse. Quite clean. Quite clean. I do know that for some brokerages, the spread on this pair can be quite high. You just have to make sure that you are trading in you have to make sure that you calculate your spread, and you obviously add it to your stop loss, and you deduct that from your take profit, just to make sure that you can run a proper 2-to-1 risk to reward. So looking at this pair, we obviously coming from a fake out now of a previous area of resistance of the previous turning point. Can we potentially see ourselves running back up to this fake out? Yeah, we can, definitely, 100%. But what's really taken, or what's really my focal point today will be this candlestick. It is a candlestick with a long wick to the downside and a bearish close. What does that mean? Basically, there was an impulse, there was a correction. However, that correction did not break the highs of the candle, which basically means it's an incomplete incomplete from a structural perspective. And what I mean by that is you have to pull back down to complete the structure, or to complete ourselves at the previous turning point. So if you're wondering what the hell I mean, I'm going to show you exactly what I mean. So up and down to our 2-hourly time frame. So 2-hourly. What the 2-hourly is telling me, the same thing. I have a long wick. We can potentially see ourselves running back down before our next impulse. What I did forget to mention though on the 4-hourly is if I can draw this Fibonacci, previous low to previous high, what I see over here is we are tapping the 61.8. It's a very strong area on the Fibonacci, and we can definitely see ourselves run back down that area. And if you want to go long, you can go long. You can run out. You can have your targets in the longs into this fake out area. So whether you are planning on going short or going long, either way, your targets will be there, and your targets in the shorts will be at the 61.8. So that's the analysis. That's what we're looking at. That's our direction, basically, down and up. And looking at this over here on the hourly time frame, what I do see is a nice region in the market. So this region in the market, I like it because it's a very strong region. Why? All you have to do is you box out your area and you extend it to the left. To the left to see how the market basically reacted upon this level. So obviously over here it was resistance, faked out as support, retested it, and we respected it obviously. Over here we broke below, we retested it as a resistance, it was respected. And over here can this potentially be respected again as a resistance. Obviously over here it was respected as an area of support as we broke above retest. Lovely. So it's a very strong area in the market, definitely. And we want to keep that in mind since we planning to take this position or this short upon the tap into that area. Lower time frame has to change market structure, and upon the change of market structure, that'll be a short. So here we are, tapping our area. You might be thinking, hey, but we are breaking above this area. Definitely not. You can obviously be generous with the region and do it as such. Either way, you will be waiting for a change of market structure on the 5-minute time frame or the 50-minute time frame. And that will obviously give you your entry for the short back down to that area over there. So if you must go down to my 5-minute time frame, and what the 5-minute is telling me is we can potentially have an area. If we can break below this region, if we can break below this area, we can be looking for shorts. I wouldn't be looking for longs at the moment, even though we can see ourselves running back up into this area. I wouldn't be looking for longs just of yet. I do want to see as mentioned previously, our direction is to the downside and then to the upside. So you want to stick with your direction, even though market structure currently on the 5-minute time frame is bullish. You will wait for a change of market structure and then take your entry for the short. You have to be patient. Unfortunately, we have to be patient. That's trading. You have to be patient to wait for your entry, and that's how we do it. So as we're coming down quite nicely, coming back up, coming back down, and we seem to be rejecting of this area of support very, very strongly. So regardless of how I did it, if we decided, you know what, this is a very strong area of support over here, I would rather wait for the break below the retest and then the long and the short, apologies. And that's fine, you could have done that. And we're just rejecting. And we finally broke below. You can say it's a break below. So what you would be doing now upon this region, if you just decided I'm going to take my short over here, your risk being, say, 60 pips over here. 60 pips, that's your risk, and your target will be over here, which would be a 155 reward. That's perfectly fine. That's a good risk to reward. That's like a 2-to-1 basically. That's a 2-to-1. Obviously over here we have now finally broken below. Now you can wait for the retest. That was your retest. That small little wick that you threw back up on this candle, on the current candle, you threw it back up. That was a retest. And it was basically a break below an area of support, retested as an area of resistance, and that was your entry. At the same time, it also was a information on the 5-minute time frame. So that was two confluences on the short area of support and the information neckline break and retest. Now what you do is you just run the trade, the stop loss or take profit. Extend it. And that was a take profit smash. That was your take profit smashed on Japan 225. Hope you enjoyed the breakdown. If you did, smash the like button, subscribe. If you have any questions, please leave it in the comment section. Other than that, keep well, keep safe, and I'll catch you in the next one. Cheers.